How we doing, guys? Mr. Anderson here. I hope everyone's good. All right, so what are we going to talk about today? I want to make sure we're running here. Yep, looks like we're good. Basically, we're going to talk a little bit about application. We're going to review some things, and we'll get a little bit deeper into some of it. A lot of people can give me a lot of positive feedback, which is great. If there's some negative feedback, I'd love to hear it as well. I want to hear where you guys are at. If you're stuck, do you think you're going too slow? If anyone who thinks you're going too slow, I love it. That would be great. We'll start talking about ways to kind of expedite that. Maybe some ways to get you going a little quicker than others, if that's the case. But for most, I would say that if you're thinking that it's not really the case, you want to learn this ad nauseum, right? Which is an expression that means just basically till you're sick to your stomach. But more importantly, what I really mean by that is I just want you to know it like the back of your hand, something that you know inside and out without question. That's where we want you. That's what trading's about. I mean, let me give you some examples, right? So basically you see here is kind of the stuff we've spoken about, nothing new at it. And it's enough. I mean, you could even take some of it off, but it's enough. Now let me give you some examples of what we could do. And I know how some people like to do. They like to throw everything imaginable to you, like something like this. Maybe if I came on and said, all right guys, this is what we're doing today. We're going to talk about wave structures, and we're going to talk about squeeze plays and how that all comes, and look at this, and some of you might say, hey, cool, interesting. So others might say this is crazy, which I hope you would say. It's not necessary, I'll tell you that much. Now there are strategies there that we'll discuss. We could say, hey, let's get into GAN. Check this out. I like GAN. I love GAN. Very interesting. This stuff's intriguing. You could read about it for hours, get into it. If you could master GAN, God bless you. But what it ends up being more than anything is confusing, right? So we could add a bunch of different elements and talk about sine waves and inverse RSIs, and see what else we look at. I scan these things myself, but I've been doing this a long time, so I'll keep an eye on a couple of little things, but I make sure that even though I'm into it, I don't let it affect me much. I'm just looking for little discrepancies to see if maybe one indicator is picking something up that something else isn't, while being careful, because indicators do lie, right? So I don't put a lot of weight into it. I just happen to see if I can catch something in my little bit of time of studying these extra type of charts. Like for instance, this is called inverse RSI. This is inverse CCI. This is inverse stochastic. This is a LARC RSI. So we won't get into teaching those at all. They're interesting. They're there to try to eliminate noise. Sometimes they're a little quicker to give you a signal than maybe a typical stochastic or RSI or anything along those lines. But right here and now, doesn't matter. I'll show you another. This is Hurst waves. Very powerful. I don't know why this keeps popping up when I do that. These things, they can be very beneficial. You see a little turn of the ribbon here, got a breakout, right? But there's also a lot of times in this type of environment that none of that's really going to help you. If I had something specific that was going to help you dramatically, trust me, you would already have it. I would be showing it to you. But because everything's been in a clear consolidation, I had some guys on the internet telling me the other day that they can't call this a wedge. Okay, don't call it a wedge, but it's a triangle, right? So that's the basic premise of a wedge, which is that you basically have a consolidating pattern. People want to get into arguments over what pattern is this and what does that really mean, etc., etc. Doesn't matter which way you want to paint it. You can call it a descending triangle, you can call it a wedge, you can call it, as I told them that day, I think I told them you can call it a grilled cheese sandwich. I don't really care. What it is, it's a consolidating pattern, right? So whereas you were getting a signal here, where you went from red to green, you don't need to know this, I'm just showing you that. What ended up happening is you had a solid slope. The slope would have told you that, hey, this is something beneficial, and it was. It took off. But the difference is that as you move forward here, we've seen something similar, and it only lasted as a one-day move, right? Seen something similar here, and you got nothing from it the following days, really. Here you got a little something. So I like this tool. If you want to investigate any tool, feel free. But just don't fall in love with any of them. And none of them are or godsends, basically. You want to learn how to trade more than anything. This is one that we actually will talk about pretty soon. We'll switch gears a little and get into some different topics of moving averages in MMA, multiple moving averages, and this is GMMA. But we're not going to talk about it today, and I'm just giving you some of the things you might see on the internet and say, oh, look, that looks pretty, that looks interesting. Great. What it all comes down to in the end is that you want to know what you know. Right? Does that sound like a cop-out? It isn't. It means that the things you are studying, I want you to learn them first. I want you to know them in detail. I want you to know them so well that you say, I have to learn something else now because, I already know this so well. I can't possibly learn any more about it. And obviously no one could be in that position just yet. So let's get back to what we have been doing. We've been focusing on, let me change this to a daily for now. We've been focusing on utilizing either our own signals, right? Let me just type something up here. I actually have it already typed up and just put it on the screen for you. So we can talk about the application of how some of this works. And there you go. So I'll leave this here. You can pause it if you want to. I'll even include it in the email on the bottom. Sort of a basic review, right, of the things we discussed. Take a wide view from weekly, then daily, then a lower time frame if you'd like, depending on the trade and the time frame. I'll explain all this in a second. We'll review this completely. Identify your support and resistance. Identify your stop loss and take profit areas before taking a trade. We're going to talk about that more today. Ideally from support to resistance. We spoke about that in Anatomy of a Trade and the second Anatomy of a Trade version, but we'll talk about it today. Take your signal or your decision, meaning it doesn't always have to be a signal from an indicator, right? We're talking about learning to trade here. So if you make a decision, then take that decision and bring it to a lower time frame by shrinking by 2 to 6 time frames. Now you don't have to. If you get a daily signal or you want to keep it daily, you could. You're going to sharpen your exits by shrinking your time frame, but you don't have to. And look, sometimes you'll shrink in that time frame and your exit will not be as good. Now more often than not, you'll sharpen it. But there's going to be times when they run, right? And you miss out, and that's trading. If you win, don't worry. Anytime you make money, don't worry about something taking off. Now, if it happens consistently, all right, well, then something's happening, right? We'll discuss what it is and figure out there's something that you might be doing wrong that's putting you in a position that you're consistently cutting into your profits. And if that happens, that's a learning experience, and you'll go through it. There's always going to be a trade, right? You're not trading this year and retiring. You're going to be trading for several years. And the beautiful thing about trading is when you retire, you can trade, right? I retired from trading a few times in my life, and basically we'll talk about that when we get into advanced trading concepts, but it's very easy to be retired and spend a couple hours to sell calls and or selling puts, whatever you want to do, and get into traditional type markets. But you can easily protect yourself, guarantee yourself some profits, and make money when you know how to trade. So again, that's getting far advanced down the road, but the idea is that you're never really retired from trading. In the time where I was not actively trading, I still made my trades, and I can identify things on a weekly basis or sometimes even a longer time frame and set up the trade so that I didn't have to pay much attention to it and knew I was making money. It can work that way. So now that we have that in mind, that's the decision. And then turn on your Heikin Ashi, wait for a color change, or look out for a color change if you just enter without color flip first. I'll explain what I mean by all this. I think you guys know. But the simple version of that, since I'm just giving you a little summary here, is that obviously sometimes what I say is, depending on when you see the signal, you might go in, lower your time frame, and wait. If it was a long signal and you're already in green on the Heikin Ashi, you might say, all right, well, I'm going to wait for a red, and then immediately when I get the green flip, I'm going to enter again. Sometimes, though, you might see the signal earlier, you decide to enter, and it's your right. You're the person making the trade. Do what you want. And that could work out swimmingly well if you got the entry well enough, and you can start to figure those things out, which we'll discuss today. But basically, if you enter without waiting for a couple color changes, meaning you got the signal on the higher time frame, you switch, it looked like, hey, it hasn't really moved much, I'm okay with where I'm at, maybe it's about to break out or it's sitting on a support that I like and I want to go ahead and enter, feel free, but still keep an eye out now for that change to red, because now if it changes to red, obviously you want to exit, right? And then keep an eye out on the RSI for weakness or divergence. which we'll discuss again. We're going to review everything. Today is just going to be application, right? So how do we apply this again? And we want to make sure that you should be doing this on your own. If you could do this 100 times, great. Go through, practice. The more you can do it, the better. And then I'll talk. I won't go too deep into it this time, but within this next video, I'll start to talk about how you can basically look at some lower time frames, even if you never intend to trade a lower time frame. But as a practice, meaning you can get practice for your longer time frames by researching low time frames in real time, but then stepping away for a couple hours, seeing how it played out, etc. We'll get into that. I'll explain. But the idea is that the low time frame, like a 5-minute chart, maybe you would never trade that in your lifetime, but it's going to give you more data more quickly. I'll give you an example with this chart right here. If we switch it to a 5-minute, basically you might say, all right, well, I'm looking, based on whatever it is. Say you decided that you were going to take an entry here. You could mark it. You could write, obviously you would write it down in this situation, but also mark it on your chart, right? Something like that. That's my entry. And start to see how it played out. Maybe take some notes in terms of what you were looking for. And the good thing is you can go into another chart, come back 30 minutes later, and you would have 6 more bars of information, so that there's somewhat of a real-time element. Because obviously if you're trading on a daily time frame, you'd have to wait 6 days, right, to get that same information. So will it always translate exactly the same? No, not exactly, because obviously there's manipulation in markets, there's algorithms that are doing trading, etc. So there's going to be some elements and times within the market that the information, the data isn't ideal to the higher time frame. But more often than not, it does correlate. What will happen on low time frames happens routinely the same on the higher time frame, as far as the pattern and the entry signals and things of that nature. It's just that the higher time frame takes so much more time to play out. Okay, so this is something that can work well. You can say, hey, let me go in and try to identify some areas. Now, the problematic element that you'll have is that, basically your entry here is going to look at resistance there. So don't focus too much on how far it travels, just more of, hey, am I identifying entries pretty well? Maybe you don't have to focus so heavily on your risk reward, because maybe it's not going to be at par. For instance, in this situation, if I was entering here, I might say, if for whatever reason I like this entry, if I said, hey, this seems relatively like a decent support, I'm going to enter. If you like the RSI or something along those lines, and you said this was my entry, then this might be your first take profit, right? Because you could do a take profit there, saying, I don't expect it to get past these highs, and then a second take profit there. So first take profit, second. But you might say, wait, I'm at 431, my take profit here is around 435. Obviously you wouldn't really do a trade like that, because there's not a lot. You'd have to put a pretty big position to make money to do that small of a percentage. But you can still practice to say, hey, am I properly identifying the distance that it'll travel before it sees resistance? And what will happen by doing that is, when you're wrong, you can evaluate and kind of figure out, what did I see wrong? Was I not looking at the RSI properly? Was I not looking at the support and resistance? And you'll start to see some of this for yourself, right? Did I check to see if it was at least threatening to come out of the price action channel here, right? Because to advance, so we've seen here that you basically were under price action channel, then back in it. It threatened to come out, right? And it needs to come out if it's going to make an advance. But it did not, came back in. But then when it came out, a couple more points, back in, right? Back down to the downside a little. Then you're in the price action channel. The only reason I'm showing you this is that you do know that it has to threaten this level to come out, right? It's not going to be a situation where it's so slow and steady that it stays inside the price action channel as it rises. So you'll need it to threaten that area to come out. So you'll be able to identify some of that. This isn't a teaching moment right here. This is just more of a, hey, this is one way for you to not look at things in total hindsight, because I know how it works. You might think, well, look, in hindsight I can do a great job, and you're right. It's easier to do in hindsight. But hindsight is what we have, so we have to practice that way. Otherwise, I would be making a video and say, all right, check back next week and see how we did. So with this, you can utilize the lower time frame to your advantage to kind of make some of those decisions. And basically, if you see that, all right, it went up to this point, I would have had a take profit 1 there, a take profit 2 right here. What that means basically is, perhaps you said, I'm going to take 25% of my position and sell it at this first stop, take profit 1. When I go over something like this, guys, and you don't see me review it in detail, it's not that you're not going to learn it. You absolutely are. It's just that this isn't that moment, right? Because I'll make this a 2-hour video if I start going into that right then and there. But briefly, it just means that if I had $1,000 worth of Red Pulse, I would basically sell 25 to 50% there, 25 to 50% there. You'll make that decision based on how you feel and the next move could be. And that would be basically a way of saying, hey, you know what, my reward is here, my risk would be under this candle or under the low of that candle, etc., and see how it plays out based on where you decide to take an entry. So that's just a very, kind of going off subject obviously, but I was just trying to give you an idea of how you could practice some. Let's take this back to a daily, and we'll talk again about application. So when I say application, I'm basically saying everything that we went over so far. Let's continue to talk about how we apply this, because with what you have now, if you truly understand that, you could, if you were giving an example in traditional markets, I mean, you would have crushed it in the last couple of weeks because of the volatility was there. And you've been given a system now, and you're learning a system that not only with the signals but without, the system's still there. Now, I do want to explain that. Basically, whether we have the signals on or don't, the system still is the system, right? Meaning if you are the signal, you yourself are deciding this is a buy and this is a short, the system still exists regardless of that buy or sell coming from you or the golden child, or from you or God's eye, or from you or the swing scalper, or eventually Neo, which is coming soon. So keep that in mind. The system isn't based off the indicator. The system works regardless, right? So you have a system that already, following just that system, you're going to make money. I'm very confident that, I have no doubt, as long as you perfect it, right? So perfect that first, and then after you really perfect that, we could start to discuss some of the specifics of, hey, how do we add, something like this, maybe we want to add some wave analysis, and how do we talk about squeeze plays, and let's talk about MMAs within the construct of this particular chart. That might be something that we discuss. We're going to get into the moving averages pretty soon, obviously, as I mentioned, because that is going to be an integral part. We kind of touch base. My price action channel is to play on moving averages, so we'll explain that when I get there. I just don't want to give you too much. Giving you too much, what happens is you end up. Let's take a basic example. If you, I don't want this to blind you here. Let me just get this to where you're looking at something a little bit more aesthetically pleasing. So when you learn how to drive a car, most of you probably know how to drive a car or some type of automobile. If you don't, then forgive me, but most of you do. Now, when you initially learned how to drive anything, there was a process. If you learned how to do it the proper way, you understand that you have to come in, you have to put in your seatbelt, you have to check your mirrors, you have to turn on the ignition one way or the other, make sure you have gas in the car, look back into the rearview mirrors before you back out, look forward, look to your left, look to your right, right? There's a lot of processes. Put your foot on the brake, go ahead and put yourself in either reverse or drive, keep your hands on the wheel a certain way in the beginning. So eventually, obviously, that becomes second nature, all of those things. But in the very beginning, there was 100 different tasks, and if you put someone who doesn't know how to drive in a car, they're going to feel like panic-stricken, literally. They're going to feel a weight on their chest as they're driving this death trap around that they don't know how to drive, don't understand the rules, they don't know the street signs, they don't understand which side of the road to drive in. You can imagine if you put a kid who's never driven in there, and I don't mean like a young child, maybe in the United States people start driving at 16, right? I know different parts of the country it's different. Now, there might be younger kids that learn, but for those that didn't at 15 when they start that process, believe you me, it is basically a stressful process, because you do feel a little bit panic, when you see another car coming, how that works. It's an adjustment, right? And I bring that example up because, right now, you've seen an indicator. You might have learned a bunch of things in the past. You might already know RSI, so I put RSI into the mix. I explain my own price action channel, when you need to use it, when you don't, or don't use it at all. It's not that relative. My point is that if if you put up an indicator and we start talking about the application of the things that I brought up, it might seem like a lot, right? Go back to this daily again, just so that I can show you. You know, this little list here, it could seem overwhelming, but one day it's just going to be like driving, right? You're going to get in, it's second nature, and it's going to be boop, 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 boop. You're going to do these things automatically. And it's at that time that you decide, you know what, let me add something else, right? I'm not going to turn the radio on in the car and distract myself until I know how to drive. You know, if you don't know how to drive and you're booming your radio, probably not the best combination, you know what I mean? And it's the same type of thing. You know, ultimately you're not going to add a distraction of another indicator right now. You don't need it. Why? You know, why confuse yourself more? And that's what happens when people learn. They come in, they say, let's learn RSI, let's learn Stoke, let's learn this other fancy one that we have here now, support and resistance to some degree, and yeah, let's go ahead and start talking about diagonal lines, and let's start talking about horizontal line. And you have 47 different things, not just the car where you have a list, but you have so many that you're confused, because if you know out of that 80% of it, you might think, hey, that's pretty good, but it's not. You want to know what you're utilizing and the tools that you're using immensely, 100%. You want to know it so well that there's no risk there of having any situations to where, you know what, I'm not going to forget about my support and resistance lines because I know everything well. I come in and a pilot, right? Pilot's probably a better example. It's just that, you know, how many of us have flown anything? You know, probably not that many of us. So if you're a pilot, these guys, they have no issue flying, right? They come in, they got a checklist, right? They have to check all their instruments, but they do it in a flash. And let me tell you, any decent pilot, they do it every single time, right? They can fly according to those instruments. Same thing, right? We're teaching you to fly according to some instruments here. And pilot can do a lot of other tasks as well because they've learned it to such a degree that it's second nature. So this will happen. You know, you're going to fall into that category at some point. So be patient and acknowledge that, hey, you know what, that's it, that's what it is. But don't thirst for more. You know, the pilot is in the air flying the plane and realizes, like, hey, this is a dangerous tool that I have here, right? I could put myself in a very dangerous situation by not following all of the protocol, right? So they're not looking to add any distractions or anything along those lines. They're putting themselves into a situation to where they know that they have to first identify what they're supposed to do, identify it well, their instruments, make sure there's no issues, make sure there's no distractions, etc. And then, who knows, maybe they start having a conversation with their co-pilot or whatever else they have to do, or relaxing. But first, get down the things that need to be done. And it's the same thing. Obviously, this isn't a life or death type situation, but although it seems like a list of some things and maybe it's complicated for some, at some point it will be second nature. And if you feel you know it, remember, you will want to know this so well that it's automatic. Because I've heard a lot of people, I talked to a lot of people about the groups they were in, and someone teaches them a strategy, and you know, the strategy is only good for this situation or that situation. I can't speak on that specifically. I know how it happens. I see it happen all the time. But this strategy, you know, I'm the first to tell you, hey, you know what, in a choppy market, you know, you're going to need some type of movement, right? Because this is not range trading. And you'll learn range trading, right? But ultimately, we're looking for a trending type of market of some sort. And trending could mean, you know, you could trend on a 4-hour time frame without the market itself trending. But the point I'm trying to make is that this type of system is the one that's going to make you the most money over significant periods of time. Okay, so here we go. That's there. I'll take this out the way for now because you don't need it. I'll put it back. I'll probably include it in the email that goes out with this particular video as well, so you can refer back to it if you need to. But let's get it out the way just for the time being. And we're going to talk about some application. Let's go and review something together and start talking about it. So here we go. This is Red Pulse, right? So we got Red Pulse. Why am I bringing it up? No particular reason. Just said it had some action, and at least in the last couple months or so. And what's the first thing you do? We're gonna go ahead and start on a weekly time frame. We want to start from our weekly. This doesn't have a lot of data, right? So it's not going to be a ton of information on the weekly. But no matter what you're looking at, start on your weekly, right? Scroll down to your daily, and depending on the trade that you're looking at, maybe even go a little bit further. But the idea is, what we want to do is we want to take a wide view to look for anatomy of a trade, support, resistance lines, things of that nature. So what do we get on this very high time frame? Well, first thing we've seen is that when this thing started trading on this particular platform, Binance, it started up here, and we could say, all right, well, let's identify this area. We don't have a lot here, guys. I'm going to show you something you can do, by the way. We don't have a lot of data. This big volume is skewing, so let's try to get it out the way. And suddenly we start to see a little bit more volume, right? So under a normal circumstance, we would look for something like a pivot point of some kind. And then I like to look for the next candle. We talked about this in a couple different videos. And I would draw an area of interest box, right, which will eventually become support or resistance depending on which way it goes. The difference here is that there is so much volume here in this box. I'm basically going to be forced, and we see what happened, it went down. I'm going to be forced to draw in my area of interest right there and know that immediately it's going to become resistance, right? So that's what we know so far. We know that's going to be a resistance area. The specifics of this, we'll talk more about it as we go on. I spoke about it more in the last video, so you can reference to that. I don't want to go over this for 30 minutes right now, but ultimately the specific of this is that this is a wick that was rejected, right? And I'm going to scroll down to a daily time frame. We'll get more information on this. It's just the way that this played out. I didn't get an inside bar. I would have liked to see an inside candle and then utilize the inside candle, but we'll probably see how this transpired on the daily to see why that did or did not happen. All right, so then going down, we got more of like a doji. Okay, if you don't know your candlesticks, you could start to study them. We will do that eventually as well. This isn't the time, but we're going to go ahead and take the whole doji because that candle is an indecision candle. And as I mentioned, we're going to, in this case, it's the bottoming candle because it's a doji at the bottom of a range. But what we're going to do is we're going to get this whole area as an area of interest at that time. We see that this broke down, so it becomes resistance. Right now, I just want you to see what we'll do on a higher time frame. We want to take the top and the bottom, okay? So don't get confused, because this one doesn't have a lot of data, so I don't want it to confuse you. It's just you're going to a local top and a local bottom to identify your higher time frame support resistance. In this case, this would have acted as resistance until we got a support resistance flip, which means that the price penetrated through. So until we get above this area, we're going to call this resistance, right? Until we get below this area, we're going to call that support. So let's lower the time frame. That was our weekly and our weekly time frame support resistance. Now we'll go ahead and look at a daily. And again, when there was some mixed information there, sometimes I'll come in and I'll adjust this. I didn't get the inside candle that I wanted, so I'll look at the volume. And this volume right here, see this gigantic volume is so much bigger than anything around it. So now I'm able to take, sometimes I would do an inside candle, meaning an inside range, meaning I'll show a range of this one and another one inside. If I lose you on this, don't worry, go back to the video that we discussed if necessary, or just try to follow along. Sometimes when I'm doing this, it's because it's not the end of the world, meaning it's just nothing that's too clear. That's why I'm just showing you how it's done. I will make a side note here, which is that I was speaking to someone here on the team, and he was mentioning another trader, and that this guy does his ranges a little bit different. And sometimes he thinks the guy's a genius, sometimes he thinks the guy is crazy, he's not sure. What I said to him was, by all means, I encourage you guys to look into as much information as you like, as long as it's not going to cloud your mind, right? Just like I brought up with the other indicators, I don't want you guys to learn 15 different things. If you want to study support and resistance from one guy who has a system and you incorporate that into the rest of this system, feel free. God bless you. That's going to be completely up to you. I don't have any problem. I'm never going to say anything negative. I'm not against it. There are many ways to skin a cat, right? There's a lot of ways to trade. I know my way works. I know that for 20 years there's never been an issue with it. But that doesn't mean you can't add to it, perfect it, find your own way. And I really mean that. I'm not the type that would say, oh, well, you're doing something differently. I'm against that. What does that mean? That I'm the only one that can do this? No. I'm going to show you the things that have been effective for me. There might be things that are far more effective. God bless them if they've identified something in their range structure that works consistently and better. So feel free to experiment with that. Just don't get the problem with a lot of those guys, and I'm not saying the guy that he was referencing because I don't know him, but a lot of these guys, they find a strategy of some sort and they think that's it. That's the end all be all, and it's all about their strategy and nothing else can work, and they make it into some strange thing because that's just nonsense. The reality is I can guarantee you that what I do works, and if his works, great. I could see that. And the Fibonacci, guys that use only Fibonacci, it can work. Only dynamic support, like exponential moving averages, it can work. As long as there's a consistent approach to how you yourself are taking that particular system, then absolutely it can work. Because although it's giving different types of information, the information is going to keep you out of some bad trades and keep you in some good ones, right? That's what matters the most. It doesn't matter so much that my resistance line stops here and his stops there or there and there. So don't get too confused by that, and don't focus so heavily on this that it throws you off. There's going to be a time where I review this in more detail, and this one's a little funky because it's not exactly like I showed you guys. It's just that we don't have it laid out, but I'll find some examples that are similar. Okay, as an example, if we're looking on a daily, obviously we've already fast forwarded, but there was a time where this pullback, would have fell more in line with what I look at for an area of interest. I know I'm throwing a lot of information at you, and that's okay. That's kind of the point here. We're just walking through an application of this together. Where I would have said, all right, this candle interests me, even though the volume was terrible there. I had some interest in this particular candle because it's an inside candle at the end of a run. And it's not support or resistance, but you notice that it does hang out in this area. And what I would say is that regardless of what occurs, a close above this zone is going to be somewhat bullish, and a close below it will be somewhat bearish, right? So this area does matter, and it did matter, and it ended up ultimately creating a zone here to where you'd say, I told you I do stretch this to the bottom wick of the previous candle. So you end up seeing that not only did it act as an area of interest, but once it lost it on a closing base hit, it acted as a resistance on the top side, like a ceiling, and then it broke down from there. So we don't have to get into that right now, but ultimately I'm just giving you an understanding that I still do things the way I showed you. It's just that sometimes I'll see something that doesn't quite fit this mold. I would like to see just an inside candle, meaning the candle's inside a big run. I want to see a fairly solid candle with an inside candle, and then I can take the range of that candle. But when I don't get that, I'll take the whole candle. Sometimes I'll have to stretch it out to this whole candle, right? Which that huge one would make sense, believe it or not. This will make sense as a whole resistance zone. But for now, I'm going to go ahead and say, because of the volume profile, I'm going to take this one. Okay. If I lose you, don't allow that. Just act like it never happened. Trust me, we will review it again, and it will make sense. Now, following back, going over and seeing where we bottomed out. Okay, and this basically showed us that this was our weekly range. I'm just seeing if I can see something that's a little tighter. And we ended up getting, I'm going to keep this range here because I don't see anything on the daily scale that's going to change my opinion. I do see that this is what's called a hammer and an inverted hammer. I want to keep this volume here showing that ultimately we ended up in a situation to where we got sort of an inside candle here, but not tremendous volume. But you can draw something here. We'll see if it comes into play. We'll say, all right, look. Basically, this was a support catch zone within the catch zone. Probably doesn't come back into play, but if you end up getting yourself into a position down the road where you see some falling momentum, that might be an area of interest again. So I like this bigger zone that we've already drawn out, so I'm going to keep it that way. I will change this as a secondary zone, and you can label them. Just don't make it so that your page is so confusing. For now, it's not necessary. I just have this inner layer that mattered just for a few days. As you could see, once it got out, it was clear, and there's a potential that this could be an extra support within that. So let's move forward as we go through. We drew some simple lines. We can go to a lower time frame, but we don't have to, right? Basically, had we started this process right here, right? We would have drew the same thing. There would have been no reason for us to draw anything different. Ultimately, what we can find out is that this particular area right here, see how we were downtrending, then we had some inside days and then bearish information that led us to this particular zone on a higher time frame, which was the weekly. Okay? Why am I doing all this? Well, the idea is pretty simple. Let me go back to my weekly because I know I moved that a little bit. Pretty sure it had to be here because it's the top of that wick that weekly came on. Okay. So why do this? Well, basically a couple things. One, if we were looking at this in September, we would have had this drawn in and this drawn in. And we would have been looking for this particular coin, in this case it's red poles, to get above, with at this point was an area of interest. It actually wasn't support or resistance when we first drew it. Once it got to this point, we had this drawn out. You could technically say that it started here if you want, because you wouldn't have known about this level until it got there, but then you started to see that it was holding, so this would have been an area of interest. It would not have been green. You can color it whatever you want. I'll let you make that your own decision. I usually know what they are from looking at them, so I don't necessarily have to color them one or the other, but if you use a dark screen, color it white, until you know. So if it happens to break out, then it'll become green. If it happens to break under, then technically it's resistance, right, like this. And you could go ahead and change the color to red. But what did we learn? We learned that this area here acted well as resistance, right? We can see that we drew this area because we had that weekly scale, and then we drew the bottom of it because it's stopped out. We started to see some wicks there, and this area held. Very quickly you're able to establish an area of support, but it's not, I will, just because I don't want to confuse you guys, and I apologize for bouncing around here, but I will draw this as a neutral white because it didn't get out, right? It never got out. Let's just see it as white for now, and then we know we got this other level if we need it. If we fall back in, it doesn't happen, right? What ends up happening is you see that these areas were starting to get rejected. So technically you could draw yourself a line, something that's going to make you aware of the fact that you had 1, 2, 3, 4, 5, basically 6 rejections. I'll show you what I mean starting at that level. But again, don't worry about that right now. I'm just kind of putting some things in your mind, probably confusing you and overwhelming you, and that's okay. I just want to show you that just by drawing a little box here, we can start to say, all right, here's how things look, right? And start to establish where we're at. Nothing was really happening. This was in a zone, but what we do notice is that we were sort of knocking on the door here until we got to this point, and something interesting happens, right? We get to a point where we knock on the door and we wick up. Interesting. What does that mean, right? Well, it means that we now have to establish this area as a resistance. It would have been beautiful just to close out here nicely, right? And to trade over here. But once we see that we establish this wick and drop back in, we have to establish this area. And one of the issues here is hindsight. You're going to see we don't have to look right now. We just keep it like that. And establish this temporarily as a resistance area. Why? Well, you got to act and imagine as if you were basically looking at this at that time, right? That this was an area that at the time you were focusing on right here as an area that was being resisted. So although we had a resistance zone, now we have a resistance area as well. Don't get caught up in the term, that doesn't matter. Just know that you haven't shown the capability of penetrating through. So we want to get up above this area, and then technically we want to break above this as well. Those are the areas we need to make sure we can clear at some point. Then something interesting happens. Right. This was the level, right? We break through. Right? So now you would think, wait a second, this is bullish, right? Because we're trying to get here. But remember, now that we reestablished our zone up here, we're seeing that truly what we need to break is this area to feel more comfortable. Because temporarily you broke above. But unfortunately you created a scenario to where you had this established resistance that we talked about very briefly earlier that I kind of just drew a line for and told you we'd come back to it. But we see that this tested that area as well, so then it mattered, right? If I'm losing you, don't worry. Just briefly going over some of this to where you see we were able to draw a line in this area to show that there was multiple rejections, and then when you lose that line, it ends up becoming resistance. So we started off showing this a few minutes ago, and then technically you could have had this area drawn out like this back then. Right? Everyone understand that? And I know I took the long road to kind of show you, but I wanted you to be able to see some of it without me just mapping it out. I drew you that line to begin with and kind of deleted it so it would show you would come back to it. But the truth of the matter is, you could have drew this out right then and there. This was an area that was support, blew right through it, right? It became resistance, and then we could see that the rest of our structure starts to make sense. You're trying to get above this area, and you would like it to end up being a support. It did technically. I mean, technically for this area, right here, right there, you could have called this a support because it flipped. And you might say, well, wait, Mr. Anderson didn't hold anything. Well, new support doesn't mean strong support, right? This is a very new support, and you wouldn't have traded this unless you started to get a little bit of action here on top of the support. Well, you never got that. The next day, rejected back into that area. So right then and there, here, this would have become a little bit of a resistance. Again, not a strong resistance. It's just been rejecting. In fact, you've tested that several times, and the more often you test that resistance, the weaker it gets. And you're showing now that you're knocking at that door. And then eventually, boom, you break through. This will become support. Right? And then eventually you still have this resistance to deal with, so you might not have thought of even taking a trade here. I'm not trying to make a claim that you would have traded this because, hey, you got this overhead here. I'm just drawing some pictures for you, okay? You guys probably think I'm getting at something very specific. I'm not. I'm just walking you through the mindset of a trader, right? And then ultimately, boom, big volume, okay? Volume matters. We're not going to teach volume today, but you probably know enough to know that big volume means something. And that big volume got you through, right? So here we are. You boom through, finally, the resistance levels that you've been having. And now, what happens? You end up in a situation to where this becomes support as well. You now flipped to where you have several areas, including this line that we started out with, several areas of support. And so that was right here, this day. So now you have a good zone here before there's some resistance. Now, this is absolutely something that I would draw. Of course, you know, normally you draw resistance like that because you want to go from the wick body, from the body to the top of the wick. At least that's how I like to do it. But this whole area, until we show that we can get above it, is an area of resistance. Or if you were taking a trade, this would be a place, an area to set up a take profit, maybe a second take profit, etc. But what have we shown? You know, if you were watching Red Bulls, then all of these areas could have been on lower time frames. If we switch down, let me go ahead and bring this back to you again, right? Get this out the way. Right there. Keep this over here like this. So we say we want to identify the weekly and the daily and lower time frame if you would like, right? So right now we did weekly and daily just for the sake of this example. But if you were looking to trade in here during this time, it's not that you couldn't. It's just that you would have had to be on a much lower time frame to possibly look at the fact that there was enough room between what would have been then support right there and resistance up there to say, all right, I'm going to trade this level, right? And the resistance, you would have this take profit area, right? But you don't put it right at the resistance, you put it a little bit under. And hopefully you would have been filled up there, and on a pullback you could have made some decisions to say, hey, this is getting rejected, do I want to get back in or not? And you could see it continue to have issues. But on the lower time frame, you could have taken your position because it did have a few bars on top of what became new support here. Does that make sense? I hope you guys are following this. If not, you can watch this video again, or if I'm doing a terrible job, I could re-explain. But I'm showing you first that on a daily scale, you would not have been too interested in any of this, right? You could have said, you know what, I'm going to take a shot here, right? But truly, whether you acknowledged it or not, that's because you went to a lower time frame to do that. And then when you see this setup right there, I'm going to really focus in on this, right? I don't want this to confuse you. I can't keep changing the colors back and forth because it'll drive you crazy. But the idea was, at this point in time, this was resistance, remember? Resistance, 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 until right there, right? So at that very moment, that close above would have been flipping this from support to resistance, and you see it held a couple times, and now you got a retest even, right? And now you could have started to consider. I'm not saying you would have taken this straight. I'm just saying you could have started to consider, and we would have looked. Let's look at the Heikin Ashi. Obviously, remember, if you were considering it, what would have happened? You would have waited for a green candle, right? Which is right there. You had a little run to resistance. You would have sold out, waited for the flip. I hope a few of you are getting an aha right now. This is what should happen right this second. Because what we're discussing is you're waiting until you got on top, then the color change, ran to resistance, that was on the other chart, wait for the color change, ran to resistance, right? You might say, well, wait a second, it's not touching resistance. Well, let's go back to our daily, right? The way you would have drawn this out, remember, again, you wouldn't have taken this trade on the daily. I'm just making a point. You get these Heikin Ashis because they can confuse you. I'm making a point here that this is not a daily scale trade, but you would have had resistance lines drawn in, and you would have had to take profit below your resistance line here, below your resistance line here. By the way, if this thing, how this takes off eventually, as we know, if this took off and you sold at a few resistance points, who cares? That means nothing to me. I don't cry over that, because if you start chasing these dreams, you're going to catch some of these, right? But if you're chasing that here, more often than not, you're going to lose money. Trust me. Take your take profits, and then if you have a piece left over that runs like that, great, beautiful. And we're going to get there. Relax. Don't worry. Right now, we're talking about how you would have taken this trade. Well, on a daily scale, you wouldn't have. Remember, I'm explaining to you that you would have been just watching and monitoring, and it would eventually this stuff won't take you long. If you're monitoring, if this is one of the coins you monitor, you'll come in, you'll have some of these drawn, you can save this. I have this as chart education. If you end up upping your TradingView membership, you don't have to, but you could save these under different categories and just save it as Red Pulse, right? And this could be your Red Pulse chart, and every time you come back, you're waiting for the proper setup to occur. And the point that I made is that eventually on the daily scale, it did occur right there. Why? Because you ended up getting a support and resistance flip to where you did it on these lower scales, but now you could feel a little bit more comfortable, because what's the first thing we're doing? Identifying the market structure. Market structure was that we started here, we went a little bit lower, right? Lower low, lower high. It's hard to tell on the scale. Let's go ahead and lower the scale just so you can see a 6 hour, because it's new data, so this might not be the greatest example that I gave you. We'll look at one more after this, but you ended up, things were bullish, and then you started to making a series of lower low, lower high, 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 lower low, right? So I just did that just to show you. To my eyes it might look very clear, but I know you guys are just learning some of this stuff or don't have proper experience. You might not see it that way, but that's what was occurring. This market structure was very bearish, and we needed to break it. So what do? We come back, lower low, high. Okay, again, lower high, right? Because this was the high previously before the lower low. Lower high, but now higher low, right there on a daily scale. But not so much to say on a daily scale we're going to take this trade. Some people do. They might take it right there. They look at this as a little bit of a breakout of this 3-day range after the higher low. But on a daily scale, that doesn't make sense from a trading perspective. It does not. Even if it would have worked, it's something that's going to set you up for losses, because on a daily scale, you wouldn't have sold it either, right? This would have had to happen on a lower time frame. Again, I'm happy to break this down more and more and do many of these examples if need be, and I will do them in different videos until this starts to register in your mind. So I'm blowing through some of this on purpose to sort of test your understanding of this, because I know some people think, hey, I got this. So if you got this, I should be able to run through it. If not, don't worry. That just tells us you got to review these videos even more, right? Until it starts to make more sense. But we're going to teach deeper and deeper, so don't worry. But I want to run through it so that you conceptually understand some of this. So yes, on a lower time frame, this became a point of interest and a trade. On a daily time frame, not at all. We had to change the market structure. And when did that happen? When we made a higher high that took out the first, right? One right here. This is a higher high. So we went, remember, lower, 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 low, lower high, lower low, right? Right there. What happened here? Lower high, technically versus there, right? But finally, higher low. So what do we need for the market structure to change somewhat? A higher high, right? And that did happen here, higher high, right? So you could have said, wait a second, what about right there? I would have been okay with that. I just don't want to act like I'm giving you some miracle signal, right? I'm just showing you that you could have said higher high, but I have to deal with this resistance, which was true because this was a swing low failure right there, right? You had a support failure. So that's going to be resistance. So yes, you made a higher high here, but you needed to take out that resistance. And here at this point, now not only are you making a change in your market structure, but also showing that you can make a higher high with volume, right? Now, normally, a lot of times what happens is you start to see some red candles after this. So that's why we go into the context of our example of application here, which is go weekly and daily, identify some zones, identify your support and resistance, identify a stop loss and take profit area if you're going to trade, which we haven't talked about yet, so don't worry about that. We're going to come back to it. Take your signal or your decision to a lower time frame. Aha, there we go. So here we are, right there. And now I'm going to box this in so we're looking at this because a lot of times I give you these examples and I show you, and I do it on purpose to show you an example where you immediately go into a lower time frame and they immediately turn into some red candles. Well, let's go ahead and shrink our time frame to 4 hours. Let's change our candle structure to Heikin Ashi. And here's where we're at. You might say, well, wait a second, what in the world happened here? I do see some red candles. So depending on where you decided to take this, before it broke through or after, a lot of times you want to make sure it's going to break through this resistance. And you might have said, well, look, through the system we're using, I might not have taken this signal at all. And if that's the case, I understand that. Or you could say, well, wait a second, I didn't find an entry on a 4 hour, but maybe I could find one on a lower time frame. And we'll find out. And that did happen. You see what I mean? Now, what did I do? I shrunk my time frame, and then I shrunk it again. Because I'm looking for something to sit on support and then go. You understand? Now keep in mind, I want to take this on a 4 hour time frame. See, I could lose you here, and I know that. I don't want to lose you here, but I know I can. So pay attention. What did I do? I won in. I finally broke through. But if I'm using my Heikin Ashi system, I haven't got a color flip, right? Everything just stays green at this moment. So yes, you can lower your time frame a little bit more if you're looking for an entry. Let's say you're right there. I might say, all right, well, let me go ahead and down to a 1 hour. Don't go below that. Don't go below 1 hour for these, longer term time frames. But we did see a pullback, and we did see that pullback came back to this was our main support, if you remember. If you need to rewind this, do so. But we ended up getting a few red candles right to support. This is actually ideal. And I'm going to tell you guys, I did not look at this again. If you see here, the opposite occurred. It went here, and it was resisting at that, what was then resistance line. And then peeled back. Well, here we get breakout finally. We had to bring it down to a 1 hour to find an entry, but we found it, right? Now, does that mean we stay on the 1 hour? You could if you want to really actively trade it, but you could take your entry right then and there on that spot. I'll draw a little mark there. This was our entry, right? And I'll give it a little distance so you don't get confused, right? So that was your entry. Maybe you could say it was here. I don't really mind. I'm not trying to make it look better than it was. But then go back to the 4 hour candle. Why not? You want a higher time frame, you can do that. But you gave you an entry as the point. You basically stole yourself an entry without your color flip. So this is the only element that's relatively new that I'm adding because it has a play on momentum. Now you could also do something like looking at your RSI. You could say, well, maybe, Mr. Anderson, I wouldn't have done any of that because my RSI was heated. And if that's the case, that's great. I have no problem with that. I'm not saying you should have been involved in that or anything. I'm just saying that this would be a way. And if the RSI is continuing to rise, then great. It could have been a good play. But I'm not saying you should have been involved in this particular one or that this is a great strategy. This is a way to find an entry above a support resistance break. And very simply, your exits would have been, if you'd lost this line, it would have been a very tight stop. We talked about an entry around 259, 260, and you know that if it's breaking 247, something went wrong, or you could even use the previous candle. But it is a way to jump into something, because I was asked this question, well, what about when they're really heated, right? Well, usually you want to avoid it, or wait for yourself to go back red, and then get that color flip again. But the reason I'm bringing all this up is that a lot of times you guys are going to make the decisions on when to buy it. Maybe you didn't use a signal. I mean, I haven't even looked at the signal to see if there was one. Let's look at Golden Child. All right, Golden Child, it did good, right? We got a buy signal here. It failed that resistance. You had the short. Oh, I'm sorry. Don't listen to anything I said. Let me turn it to regular candles. Okay. All right, so you got the buy here. Moved up into resistance, etc. But for my taste, I would have said, hey, you know what? Only on a lower time frame. So you could have taken this to the lower time frame, as I mentioned. This is our system. I'm going to confuse you with these boxes, but I just want to target this area. That if your buy was there, I got a line through it, you would have brought this to a 4-hour Heikin Ashi, right? Which was this box, right? Waited for red, got back on the green again, traded up into resistance. Same thing, traded up into resistance. And I'm not saying that would have worked out perfectly. I'm just making a point that if you were using the signals, that's how you would have done it. All right, let's go back. Remember, this video is feeding you a lot of information at once, intentionally. Because you're either going to say, I fully understand this, or what, you know what, I have to review this stuff a lot more, which is fine. I mean, that's perfect. If you're going to utilize this for the rest of your life, don't worry about reviewing it more. Review it as much as you need to, okay? So here we go. Signal, that was Golden Child. Let's see, God's Eye probably did something similar. Yeah, it showed momentum here. And then the one we're interested in is when he broke through one of the resistance, you started to see that too. Now, how would you have made out like a bandit? Well, you saw this particular signal right there. You went down to, I want to turn the signal off, right, because I already have it boxed, right? This was this buy. So let's say you would have did this. And you would have went down to your 4-hour and down to your Heikin Ashi. And what would have happened? This was within this signal. Boom. Red, red, red. Now, what would have happened? You would have entered here, exited immediately. It would have been a bad signal. Same thing here. Except for the fact that this is what happens. I know you guys don't understand this probably, some of you. You should say, well, wait a second. You're giving me this system. And I end up a lot of times entering and then exiting the next candle. Because a signal, right, is weakest or most at risk the moment you take the signal. Meaning whether it's your signal or an algorithm or anything along those lines. Because think about it. If this was the buy point, right, and right here, if I say, all right, well, above this point, this turns into a buy. Well, act like my little cursor here is the stock or the coin, and you're going up and down and up and down, and here I'm making my way, and I know that it becomes a buy right there. It's going to say buy, and then right there, that signal failed, right? Or people push it up with overexcitement to try to get it there, but really there wasn't the buying momentum that it needed, so it actually failed, right? So that's normal, and that's fine, and I'll take these small losses. Understand why you're doing it, guys. Why are you willing to take such a small loss over and over again on a few trades? Because look what happens, guys. Understand what eventually can be your reward. Because had you done this, right, and I'm not saying you should have, again, don't misunderstand me, guys. I just want to explain that had you taken a signal like that, someone did, right? 2 guys did, right? So I did not. I was not in Red Pulse. I didn't look at Red Pulse. But the reason why we're looking at Red Pulse is I got an email from 2 different people that happened to take this particular trade. But I wanted to break it down differently to show you how you might have come up with it or what you would have been looking at. Now, I say, enter here, exit there. Enter here, exit there. 2 bad trades. 2 bad trades that barely hurt you, that lost you very small amounts. And the reason why you did those 2 bad trades is for this. This trade. Green. What is that? Right? And this isn't happening every day. It just happened in this example. But this is the point. The system keeps you protected in these situations, right? But allows you to keep runners. Understand what I'm saying here? It allows for the runners. It allows for the runners. right? It's not getting you out. Now, you could say it's not entirely true, Mr. Anderson, because you gave me a RSI system that might have gotten me out. Now, had you made an exit based on your RSI on this, then that's completely up to you. Now, if you recall, we're looking for divergence, guys, right? And this is a huge spread here between this point and this point. So had you started to exit here, it wouldn't have made sense because this is really your entrance. But if you were in this trade, you're looking for divergence in this area, which happens here to there. That's actually the divergence. Ideally, what you would do in this situation is realize that, hey, I'm getting up to 96, which is unbelievable. So I'm not saying, hey, you should have picked the top, but somewhere within this guidelines of this occurring, you probably wanted to start to shed some more profits. Not to mention the fact you probably had a take profit there and a take profit there. Let me explain that a little bit clearer. So let's say you were in this trade, right? One thing we haven't discussed yet is that this bursts through. I'll bring it back to the daily. This bursts through a resistance zone. Now the beautiful thing is, now one, when you set up your trade, remember here we talk about identify stop loss and take profit areas. Well, if you're entering right here, the reason you would have felt great about this, and I'm not going to draw out the take profit area right now because I don't want to make this video go on for 2 hours, but I'll do another video that basically talks specifically about that. I have to review the debacle that I gave you guys last time at the end of the video when I was talking about giving you good risk management. So I apologize for that, and I have to review it anyway. But just a basic overview would be that if you were entering here or here, then you would have felt that, hey, I just cleared out. I now have elements of support. My take profit, my stop loss would have been just below this area, one of these areas. And we'll get specific about that. We're not going to get specific right now. In the very near video, you'll get it. So don't worry if you don't understand that. But ultimately, I would have had a take profit. 25 or 50% of my profit would have been right there. Same here. And you might have been out of this trade. You might have missed because of that. But usually what happens on the take profit is you're gonna say, I'll take 25%. Or 50% there, depending on how weak or strong you felt it might be. You might have had a feeling and said, I'm going to take 25 there, and let the rest run. Or you said 50, 25, let the rest run. Ultimately, you have to respect this area and take some profits in here. So don't worry about the fact that you took profit here and it ran up there. That's smart trading. You know why it's smart trading? This blew up 300-something%. So had you held everything, you would have made a lot more money. But if you trade like this, holding, I assure you over time you will not only make less, you will lose money. There's not going to be enough of them that do this to offset the fact that so many will come up and then bleed back. And when that occurs, you're going to feel sick to your stomach. And then you're going to be in a situation of, should I sell, should I not sell? There's nothing worse than that. Have targeted areas to where you say, all right, look, this zone, 25%. If you want to know how I would have done it, I would have put 25% there, and I probably would have put another 50% there. So I would only have 25% of my position left for this particular run. But I would have been smiling ear to ear when this occurred, and who knows where you would have gotten out, but probably somewhere in this. If not, it even gave you a second candle here the next day to try to run into this. So you would have definitely done pretty well, right? And this is a drastic move. So the point I'm making is that regardless, there's always options, but you want to schedule everything out correctly. You want to have your criteria, your checklist, like we talked about driving a car. And I ran through all of this very fast because I want you to be able to make an assessment of yourself right now. How well do I know it? Meaning you. Do you know this like you know how to drive a car very easily if you're a driver? Where you just go in and it just happens? Or is it basically something that I just lost you on? And if I lost you, that's perfectly okay. We will get to the bottom of it. We will resolve it. And I'm not even going to get deeper into this right now. I'm not going to talk about the fact that, hey, now we should go up here and now establish this area as a resistance, right? Because exactly what I got was my resistance area. A big volume candle. The next day was still a very large volume. This area, in my opinion, is going to act as resistance. You can see it already has, right? So I'll probably put this aside and talk further about it for you in the future. But I want to basically go into this and give you this very quick, speedy example so that you can start to understand that, hey, you know what? Maybe I don't know this as well as I thought I did. And if that's the case, you're going to have to review these videos. And if there's something that I'm going over that you don't understand specifically, I want some feedback on it, because I'm getting a lot of positive feedback. But I want some of the negative. Negative feedback doesn't mean name calling and being angry or anything along those lines. And I haven't had any of that at all, and I love this group for that. But what I mean by negative feedback is like, hey man, I'm lost. Mr. Anderson, you talked about this, but I don't have any concept of that. And it doesn't mean that I'm going to review it in detail. Maybe I will. Or we'll set up a one-on-one or something along those lines. But what it will mean is I'll probably point you in a direction like, hey, that means study this particular video a little bit more detail. Or maybe this piece of learning material or something along those lines until you start to understand it. That's the idea, the concept, the type of feedback that I want to hear. So that when I say negative, it doesn't mean negative. It just means that, hey, if you're struggling, I need to know about it. And I know some of you guys might be taking your time and you plan to review them, and that's fine. Take all the time you want. I'm just talking about if you're caught up to this video right now and you're listening to this and you think you're ready for the next, I want this to be either a wake-up call or a reality check of, yes, I am ready for more, and then we can start to talk about how we add from there. Or, you know what, I have to go back and review, because there's no rush. This is not a race, right? They're not going to stop trading next week. They're not going to stop next year. There's always going to be markets, and there's always going to be markets for you to make money in. But you need to learn this in such detail. I'll repeat it till I go blind, right? And you're going to hear me say it over and over and over, that this is important, right? To learn it and learn it and learn it and learn it and learn it. This became support. Once we passed it, we'll see if it means anything. But the idea is, I want it to run through, see how well you know it, give me some feedback, let me know where you're at. Are you someone that needs to review the videos? Just say, hey, you know what, I do realize I do need to review this a little bit more. Or you know what, you've spoken about this concept, but it wasn't clear. Should it be clear? Or is there something else that you can give me that will give me some clarity? And I'll give you some feedback as well to let you know, hey, here's where we're at. Now, if everything's going smoothly, you're starting to understand that you just know you have to review it more, that's fine. You don't have to get back to me unless you want to. I just want to basically start to establish this, because I know for most people, the strategy's always been take in as much as possible. Confuse myself. And I know you're not thinking, hey, confuse myself. You're just thinking, like, I need to know a little bit of this and a little bit of that. And that's not what it is. What you need to know is a lot of what we're talking about here. We discussed how a lower time frame, by drawing some very simple lines of support, we could have taken a lower time frame trade from here to there, right? We could establish some areas. Eventually, if we were waiting on a higher time frame, which means on a daily scale, that would have happened either here or here, by then shrinking the time frame and going through the process of everything we discussed, or basically waiting till we got a clear breakout, as I just mentioned, which was in this particular candle, before we even talked about getting in. And we added a little piece, which is, hey, you know what, if we see something that's heated and we want to take a shot, sometimes you won't get that color change, and yeah, you can go to a lower time frame for an entry. Just keep your time, just keep it tight though. Let me explain that again. Remember, this video I'm rushing through on purpose because I want to know where you guys stand, okay? I want you to know where you stand as well. We talked about this 1 hour candle. I'm going to flip it back to Nikkei Ashi, which was basically right there, okay? We talked about the fact that this was getting heated, and you're saying, you know what, I really want to get in because I just broke above support resistance. If you don't understand this concept, it's one that I'll talk about a lot, but if you think you have an understanding of how when you break above a resistance and you start seeing a support immediately, that's a bullish scenario. But on that higher time frame, taking a daily signal to a 4 hour, it might not work. So if you happen to be in front of your computer and able to take it on a lower time frame, then you can. Just, you have to watch it within that immediate construct of you taking it. Doesn't mean you have to watch it after it breaks out like this, and it doesn't mean you're selling on first red, because remember, you shrunk the time frame. So what it means is that if you entered here, we talked about it, even being around 260, then you can enter it, go back to the time frame that you planned on being on, which was H4. It's just that you found yourself a decent entry, right, on H1, which is a 1 hour time frame. And in doing so, you basically found yourself an entry that was challenging, this as a support, and it held. and that would happen about right there. And then you're going to watch it for a little bit to make sure this thing doesn't reverse, because if it reverses, you have to get out. But once you start to run up, okay, you can feel comfortable to say, all right, I'm going to watch it now, and now I'm going to wait either for my color change or for my RSI to show some divergence on this time frame. And in this case, this is how you get a basic trade that turns into a runner. And this may not happen to you now. It may be it's never happened. Maybe it won't happen for a few weeks or a few months. Don't worry. We're just explaining that this has happened for a couple people, and it can and will happen for you. But I want you to be able to identify it. That this system does allow for this. Okay? All right, so that's enough. I'm hoping I confused you. That was kind of the goal of this particular video. But bring it all back to this at the end. Okay? After all the confusion, let's go ahead and bring this in front of you yet again. And I'm going to include this in the email, right? Open chart, right? Take a wide view. This is what I want you guys concentrating on. I want you going weekly, drawing a couple support and resistance of what you know. If you want to investigate support and resistance lines, you can do that. You have the right to read books and study other elements of support resistance. You'll see there's variations to it. It doesn't have to be Mr. Anderson's way, right? That's one of the good things, in my opinion, about technical analysis. It's more about staying disciplined to that way more than anything else, meaning I could use a little bit different form of support resistance. I have indicators that do a pretty good job of support resistance. I haven't introduced them to you because I don't want you to get lazy by utilizing those indicators. I actually want you to try to do this on your own first and to identify some, even if they're wrong, so that you can get used to basically doing it, because you'll notice that what little time we went over this, it always draws a little bit of a map, right? And you'll see that you're drawing clearance areas, and then sometimes when you get through, what happens? There's nothing left. I should have pointed that out. What happened here? Why did you get such an unbelievable breakout? Because this was unbelievable. You got that because basically you entered into an area where there was no resistance. So everyone had their sells set up right there, right? That was their sell-off point, and their take profits. And the rest were holders, right? No one else was trying to sell it. I don't even know if you can short this thing. So, you're in a situation to where it's probably unlikely to be able to be shorted anyway. So it ran out of sellers. So when you run out of sellers, you basically just take off to the moon, right? I don't like that expression because people overuse it, but it was a huge takeoff, right? And that's a beautiful thing. But when that happens, unload some. Take a small piece, 10%, 10%. As it's running, you start getting a runner like that, drop 10% of what you have left, each 100 Satoshis or so. And if you run out and it keeps going, who cares? The game is not about selling it here. It's not. It's about getting yourself a significant profit, which this would have been. Okay? But anyway, getting back one more time. If I confuse the heck out of you, which I wanted to do, I want you to bring it all back to this. Right here. This is the app. We want to utilize this and we want to apply it and say, all right, well, now that we have this, let's make sure we truly know how to apply it every time. Ad nauseum, right? Ad nauseum is my expression, which means that you can do it until you're sick. Because when you start making money off of it, it's not going to make you sick anymore. Then you're just going to love it. You're like, oh, wow, look at this. I have an element of protection built in. Now, are we going to add? Of course we're going to add. Are we going to get deeper into support and resistance? Much deeper. Are we going to get deeper into some indicators? Absolutely. Divergence? Yes. Entries? Of course. But, in my opinion, this is the way to go about it. Perfect this. You already have a system in place that in a market that's moving will make money. Okay? So perfect that first, and then we'll start to add pieces. If it takes you 2 months to perfect this, that's fine. If it takes you 4 months, that's fine, right? Imagine if I said, hey, look, it's going to take you 4 months to perfect something that's going to make you money the rest of your life. The rest of your life, okay? I didn't design this so that it works sometimes. This is something you can go back in time in any market and start to apply some of this stuff and find out for yourself. Whether it's my signal of an indicator, right, that you're going to use, or if you just start to utilize some of the basics of support and resistance, you'll see how well and how efficient it will work. Okay, so keep that in mind. That's it for now. I know I went very long, but hopefully you guys got something out of this. Definitely give me some feedback in terms of where you're at with it, and we'll start to break it down a little bit further. I'll talk to you soon. This is Mr. Anderson.